We have hit Q4 exactly 1.5 years following the Bitcoin halving, and Bitcoin's hovering around 9% under its October 6th all-time highs. So the big question they're wrestling with right now was $126,000, the cycle top. The 4-year cycle remains undefeated. Bear market starting now. We'll see you at 50K, baby. Or are we going much higher than $126,000? You can say goodbye to the 4-year cycle as we know it, because we're actually in something that's new, but perhaps a little bit different. Now, in my opinion, if we strip out all the noise, take away the distraction, this remains the most fundamental question, an important question that we can ask right now in the markets. So in today's video, with that big question in mind, I want to focus in again on the macro charts. So the global M2, the Fed fund rate, the S&P 500, and gold. We're going big time macro, baby. It's going to be a good one, so strap in. And let's see what direction all these are signaling us for both the price of Bitcoin, but also for the 4-year versus extended cycle question. Starting with the macro daddy, Bitcoin compared to the global M2, and the year-over-year changes in the global M2. Bitcoin is in black, global M2 is in blue, and the year-over-year M2 change is the oscillator in green and orange. Now, what's most interesting and perhaps apparent isn't so much Bitcoin's correlation to M2, but rather Bitcoin's correlation to the changes in M2. So removing the blue M2 line, you can see clearly how Bitcoin appreciated as M2 grew from 2016 to 2018. Bitcoin's bottom in the 2019 bear market was closely timed with the global M2 percentage growth bottom. The correlation continued into last cycle's top. The bottoms near the end of 2022 coincided together as well, and the slow grinding upwards chop in Bitcoin's price this cycle has been a pretty close match with the same moves in the percentage change of global M2. So if you're following me so far and you agree with all this, then the question that we really need to ask is simply this: where does the change in global M2 go from here? Because given what we just looked at, knowing where the change in global M2 goes gives us a pretty good clue as to where, well, risk markets and particularly Bitcoin goes. Now, here's the answer as best as I can tell. Obviously, nobody can predict the future, but because the data on this is so speculative and scattered around, but anyway, we consulted the AIs here. Grok's best guess is the year-over-year growth falls slightly from 7 to 4 to 6% for the rest of 2025. Probably not what bulls want to hear, and then maybe falls just one more percentage point all the way down to somewhere around 3 to 5% for the first half of 2026. Now, if Grok's right, if that were to happen, then it would actually suggest that Bitcoin probably just grinds sideways from here. Yeah, we have those little blips up, next move up to 135K, for example, followed by a big correction sideways, kind of like the price action's been over the last 6 months. The worst case scenario, of course, Bitcoin enters into a long bear market, contracts 50%. I don't know. I don't really see that based on this current data. That's kind of off the table in my opinion, based on the data as it is right now. Remember, we'd really need to see a major, massive drop in M2 growth for the big Bitcoin bear market to happen. But the M2 growth data at this point says otherwise. In fact, it says it should continue ranging sideways around this sort of 3 to 6, let's call it 4.5% area. That's if Grok's right. Nobody can predict the future. Maybe money growth speeds up faster than we predict, or Bitcoin simply just breaks away from that pattern for a little while. Next is Bitcoin and the Fed fund rate. Before we get into that though, will you step up and start taking your trading seriously? You gotta check out Femex, okay? It is an OG cryptocurrency exchange trusted by millions of traders worldwide. I've literally been trading on Femex for years. They have deep liquidity, meaning smooth execution across top coins, global access, meaning anyone, anywhere can trade freely on Femex. You might need a VPN in some cases. And here's the kicker. Right now, when you make your first deposit of $5,000 or more, you're gonna get $1,000 cash money back. That's crazy. On top of that, exclusive and using this link right down here, you can earn up to 1 full Ethereum in trading bonuses currently worth around $4,000. So don't let this offer pass you by. Make the switch today, link down below. Okay, look, so since 2020, we've seen a pretty clear inverse relationship between these two factors. Whenever the Fed fund rate goes down, Bitcoin tends to go up. Whenever the Fed fund rate goes up, Bitcoin tends to go down. Now, here's the good news. Right now, the market is projecting the Fed fund rate will go down, with the bottom coming in around 3% by May of 2027 based on current market projections. But I don't think that's adequately bullish enough on Fed fund rate cuts, because Trump's going to put in a puppet who's probably going to cut it down to 1%. But that's an unknown at this point. Now, if the projection turns out to be correct, that gives us another 19 months of falling interest rates. And that should serve as a pretty nice tailwind behind Bitcoin, helping to push prices higher and break the 4-year cycle as we know it, with the market finally topping sometime in 2027, breaking everyone's expectations about how the market should go. Now let's discuss the S&P 500. So I did an analysis on the S&P earlier this month, and the TLDR is if the S&P 500 is grinding up, that opens the door for Bitcoin to go higher. Now Bitcoin is a lot more volatile than the S&P 500. It's a lot more volatile than the NASDAQ. But again, the general rule, if the S&P 500 is grinding up, it creates a risk-on environment where investors are willing to take risks on things like Bitcoin or even dog coins. Maybe we're not quite at dog coin risk with the S&P 500, but certainly Bitcoin. Bitcoin has an easier path to go in the same direction when macro markets are moving in that direction with us. And once you know it, earlier this week, the S&P 500 busted into a new all-time high of above 6,800. So that opens the door for Bitcoin to go higher in the short term. Now, real fast before we get to gold, guys, obviously, if you love a good blend of macro and stocks and all that kind of stuff, newsletter's free, links down below. Go check it out. All right, now on to gold. Gold's been one of the bigger investment stories over the past 2 months. You've probably noticed, right? We've been talking for a while that Bitcoin tends to lag gold anywhere from 60 to 90 days. Some say the correlation's up to as much as like 120 or 180 days, but I think 60 to 90 is a pretty interesting number. And that's important because something is happening right now. So it was 60 days ago when gold broke out of this long multi-month consolidation pattern, but the price has been falling for about a week now. Meanwhile, Bitcoin appears to have bottomed about a week ago, right around the same time that gold probably topped. And since we're now making the move of 60 days past gold making the major breakout move, the door opens up for Bitcoin to have that major move if correlations hold up as they have previously. And if we do indeed see Bitcoin move up from, let's say, anywhere between now and the next 30 days approximately, so the end of November, it'll be pretty consistent wise with previous lag moves that Bitcoin has made when it followed gold. So to wrap up here, the M2 data says we're not necessarily on the cusp of any kind of brutal extended bear market, and it just doesn't, the data doesn't hold up for that kind of mentality. It does provide the base, though, for a big rally. M2's growth percentage isn't projected to have a major fall at this point, and while it may not have a major spike, with everything else going on, we can remain optimistic on the markets. We can remain bullish. When we look at the Fed fund rate, the incoming Trump puppet, the S&P 500 grinding higher, the NASDAQ grinding higher, gold correcting, all of these things are indicating that Bitcoin has a very good setup to go higher from here. Are there guarantees? No, this is investing. There are no guarantees. $126,000 is not the top. And I think we're in a longer extended cycle. It's going to fuck most people up so bad because they're not going to be able to deal with the constant grind for years and years in this PTSD-inducing psycho market. Remember, if you can't stand the dumps, you don't deserve the pumps. And volatility is the price that you pay for performance. Deal with it. We're going to be fine. Thanks for watching.